In today's episode, we are going to be talking about a very wonderful, exciting topic. And you guys have been asking me how to make $100 per day from a $1,000 portfolio type of trading account. So this is basically going to be my overall simplified version of this particular process, because obviously it is a process that requires you to use a certain methodology in order for you to receive the much needed results. So basically we're going to look at the mathematics behind the strategy of making $100 per day from a $1,000 account or portfolio. So you can basically use this on any type of portfolio size that you have. If you've got 100,000, you can actually get to make about 10% of that. So we're also going to talk about how to select what to trade. You have to decipher and sort of use several metrics in order for you to have the highest probability, in order for you to achieve your 10% profit per day. And these are obviously volume, social media, events, and a whole lot of other stuff. Anyway, so yeah, I shouldn't have social media trading. What is all that about? So anyway, social media sentiment is what I meant. Okay, so social media sentiment is definitely what I meant here, because sometimes you have to see what the masses are talking about. Okay, so the other point is obviously how to identify the trend, and we're going to talk about accumulation, distribution, but we're not really going to go into details because I just don't want to make this episode way too long. So most likely in other episodes I can talk about these things in detail. And then we're also going to talk about the different types of markets and how to use different strategies, and these are obviously the ranging and the trending markets. So I go by the name of Muna, aka Beyond 10x. So I do offer quite a number of services, and the most important one is obviously trading consultations, where I help people sort of get from beginner level to advanced level. So I have been trading cryptocurrencies for a very long period of time, since 2016, and I have been very profitable since 2020. 2016 to 2019, I had a whole lot of losses, and then I just finally found the holy grail of trading in 2020. So ever since 2020, I've been killing the markets. I've been doing tremendous. So obviously I'm willing to share this knowledge with you, because I did a lot of trial and error before I got to the pot of gold, and this is one of the reasons why I have simplified everything. So I do offer trading consultations, trading tutorials, and just basically every little thing that you need to know about trading as well. So I also offer portfolio management, where I can sort of get to see what you have, your portfolio size, and what you need to get rid of, what you need to add, and basically how you can manage that in terms of getting in and out, to all the people who are ultra busy out there. So yeah, so if you want to get the full details, please email me. My email is at 2019nextup@gmail.com. It's also going to be in the pinned comment section. It's also going to be part of the pinned comment. You're going to find all that information on the pinned comment. All right, without further ado, let's talk about 10% per day in order for you to make $100 from a $1,000 portfolio size. So in order for you to make $100 from a 1,000, right, you only have to make about 10%. Okay, so 10% of $1,000 is obviously $100. So when it comes to trading cryptocurrencies, right, cryptocurrencies are very volatile. Volatility is something that we yearn for. If you look at, or rather if you compare with traditional markets, the volatility is not really that, it's not really that comparable, if you know what I mean. Cryptocurrencies are way much more volatile. So if we look at the 24-hour trading volume with cryptocurrencies, right, a lot of these cryptocurrencies have done over 10%. For example, EOS has, done a 19% in less than 24 hours, and Thorchain has done a 15%. So that is obviously something which could really do, tremendous numbers for your portfolio. So, I mean, if you take a look at this, all these coins, you've got like more than 10 coins that have done more than 10%, like in the past 24 hours. Are you telling me that you can't really get to like identify and pinpoint one particular cryptocurrency, which is obviously going to like help you, do these numbers and pretty much get to like help you achieve your results? I'm pretty sure there are plenty of things that you can look at, but you have to identify like which ones am I going to like trade, and which ones are going to be able to like give me the highest probability in terms of achieving my reward. So this is basically in terms of achieving my goal. So this is basically where a lot of people really get confused, because there's like a lot of coins out there, there's a lot of information. Sometimes people do have analysis paralysis, but using the methods that I'm going to teach you, you guys are going to be able to like pinpoint which cryptocurrencies have got the highest probability to give you one of the best trades. Okay, so when it comes to how to select the cryptocurrencies to trade, right? You have to look at, the volume. Look at the volume, because obviously when something is about to like blow up, right, in terms of cryptocurrencies, right, volume is going to be obviously giving you an indication of what the prices might be able to like achieve and do in the near future. So if you look at sites like CoinGecko, right, we also have like other sites where you can get to like see the different cryptocurrencies that have been listed, right? So for example, coingecko.com is a very good place to start from. You guys can actually get to like look at the 24-hour volume. So obviously these cryptocurrencies that are having like a sudden shift in volume usually indicate that there's going to be some price action which is going to be happening, because just like they say, right, volume precedes price action. Okay, so what you need to do is you need to be consistently looking at these sites and just track the coins which are having like sudden spikes in volume, like over a consistent period of time. Like let's say for example 2 weeks or even a week. Let's say for example, if a coin was initially having around 5 million 24-hour trading volume, right, and then all of a sudden, before the price even starts spiking, you see that the volume is increasing. It's moving from about 5 million per day to around 50 million per day. And then on a consistent basis for like 7 days or more, right, it has gradually increased in volume, even though the price hasn't really moved that much. So that is obviously one of the indicators that you can use. So let's say for example, you're tracking some cryptocurrencies, right? Which one can we use? So if you take a look at this particular section, there is a rank, right? There are rankings, so that can really help you like decipher, like in terms of the probability of what type of gains you might be able to make. Like let's say for example, this particular cryptocurrency Algorand is occupying the 45th rank, and the market cap is only about 3 billion. So if let's say for example you find a coin which is like way undervalued in terms of market capitalization, right, this can also help you to like be able to like do your calculations and just see the profit potential that you can have, because obviously the less undervalued the market cap is, the more gains you are most likely going to get, because it is beginning to gain momentum. So if we take a look at, for example, this particular cryptocurrency, Algorand, right? If we do take a look at the volume, right? Let's say, for example, in these areas, 26th October 2020, the volume was around 55 million per day, right? And then gradually, as we, proceed, the volume did increase to 72. And then later on 123, then it just kept on spiking, 151 million, just like that, 234. So that does tell you that there is obviously potential. And if you look at the market phase in this particular area, right, we were in the distribution phase. So I'm going to talk about the accumulation and the distribution phase a little bit later, but obviously you guys understand what I'm trying to say. Like once you see that a particular cryptocurrency has been like stagnant for like a very long period of time, and all of a sudden the volume, the 24-hour volume begins to increase like gradually in a selected period of time, time, usually like above 1 week, then that is a pure indicator that there is going to be obviously price action, which could be very lucrative to trade. So when it comes to trading, right, you can obviously short the market or long the market. So basically longing the market is just pretty much, you know, getting to like buy a particular asset. Shorting the market is like getting to sell a particular asset. So if you guys are looking for like a well-rounded cryptocurrency exchange where you can get to like purchase and basically get to like trade these cryptocurrencies, right, Binance exchange, Binance.com is a very great place to start. So if you guys are going to be able to like use the link in the description box below or on the pinned comment section, you guys are going to be able to like get about you know, $50 free cryptocurrencies using my link, because I have like a specific special link to all my subscribers. So please use my you know, link in the description box, and you guys are going to be able to like get your $3 worth of cryptocurrencies that you can begin to like experiment with and hopefully get to like grow it into a whole lot. So please check out my Binance.com link in the description box below. So that is all about volume, right? So volume is one of those great indicators that you can get to like use in order for you to like identify what type of cryptocurrency to start trading. So the other thing is social media sentiment, or rather market sentiment. What are people talking about? For example, we have this amazing site, right, luna.com. So this particular website does you know, have like some few parameters that they use. The you know, is like their own secret. So basically they check out the market sentiments, or rather the sentiments of a particular cryptocurrency across various, you know, online platforms. And so far today, these are the coins that are ranking, you know, the highest. So if we take a look at these particular cryptocurrencies and just basically, you know, sort of track them, you can easily find the ones that can really give you like the highest probabilities of you making a lot of money. So this is a very good website that you can get to utilize, and it's going to like help you decipher and filter out information. So by basically looking at the ranking metrics, right, you guys can obviously like take a look at the highest you know, contenders. Like let's say for example this one, EOS. All right, if we go back to coingecko.com, right, EOS in terms of the 24-hour volume, right, so if you click on this particular area, it's going to sort of arrange you know, it's going to rank these cryptocurrencies according to their volume. Let's say for example the highest to the lowest, or the lowest to the highest. So if we take a look at this, right, EOS is obviously occupying the 4th area in terms of volume, and it has done very well. So if we go to Luna Crash, right, it's occupying the 16th area right over here. So for the past 3 days, EOS has been ranking in the top 5. So like that, you can easily be able to like, you know, like know that, okay, perhaps EOS has got something coming up and there's going to be like some good volatility. So if you take a look at Zilliqa, right, so Zilliqa right now is around, you know, it's the 4th, you know, highest in terms of market sentiment. So if we take a look at what is going to be happening, right, so if we take a look at Zilliqa, right, perhaps it's going to start pumping a little bit later. So at least you have a heads up in terms of what you can look out for, and you can filter, you know, what's happening. So if we take a look at the price of Zilliqa, we take a look at the volume, and we take a look at what has been happening, right, obviously we are beginning to like get a heads up of what could potentially give us the highest volatility and in turn make us the, you know, highest returns on investment, if you know what I mean. So going back to this particular you know, metric, right, how do you get to like select what cryptocurrencies to trade? The other metric that you can use is obviously events, because sometimes when these particular cryptocurrencies have got events, they do usually arouse investors, and this turns in price appreciation sometimes, and sometimes it could be price depreciation if they have some bad you know, things coming up and there's just some bad news. So when it comes to events, right, there is a very important website known as coinmarketcow.com. So basically this one is like a ranking type of website that really shows the authenticity in terms of votes. And here we have like the most trending ones, the most significant ones, and the hottest ones as well. So you can just get to like filter things even by dates, because you've got like a date where you can sort of choose a parameter, what time frame, and you can easily see what type of coins could potentially have the highest expectations in terms of price appreciation, because they could have some bullish events and bullish news as well. So like this, you'll be able to like filter out things based on a whole lot of factors, and you can be able to like with a higher probability or a higher chance of having a win rate just by taking a look at what's going to be happening. So this is also a very good strategy that you can get to implement. Okay, so that is as far as how to select what to trade. All right, cool. You selected a coin to trade, but what do you do then? Okay, so how to identify the trend. So basically, when it comes to markets, right, there's only about two types of markets that you need to identify. There are ranging markets and trending markets. Okay, so basically a ranging market is a market which is bound by two boundaries. For example, let's go back way back in time. Okay, so let's talk about this particular area. Okay, if you look at Bitcoin, right, this particular area was a ranging market because the price of Bitcoin was bound in a specific area. Okay, before the volatility came through, right, the price of Bitcoin was just like going between selected few areas. So we could low-key call this particular area a ranging market. So the best example is obviously this particular area right over here. I think this is a very good example because it is bound in a specific range where the price sort of pinpoints between one end to the other, goes back and forth, and then finally blasts through and becomes or rather gets into a trending market. So this particular trading action right over here is a trending market. And then again we start ranging. Okay, then we kind of get out of that particular range and we started trending towards the downside, and then later on again the ranging thing happens. Eventually we decided to break out and have an explosive ranging market, and just like that the cycle repeats itself. So when it comes to markets, there's a ranging market which is bound in specific areas where the price just sort of bounces up and down in a specific target area. That is a ranging market. And then you also have like a trending market where the price is either pushed towards the upside and there's price discovery in terms of price appreciation, or there could be dumps when the price sort of dumps and corrects towards the downside. So that is a trending a downtrending market. And then when the price is pumping, an uptrending market. So when it comes to like these two types of markets, right, you have to have two different trading methodologies. So basically when it comes to these ranging markets, right, the price is obviously going to be in accumulation. So accumulation happens before the price sort of has an uptrend. Okay, so you have a ranging market, and then the price gets accumulated by the most significant players when it comes to determining where the price is going to go, right? And once the accumulation phase is done, the price proceeds to pump towards the upside, and vice versa. There is a distribution, or rather, a distribution phase whereby the price has been in a trending market, and then the price can't really go any further up high, right? And then the price ping-pongs up and down, and then eventually, since there is no buying momentum, it does fall towards the downside and it starts having a downtrend. So there is accumulation before a pump and distribution before a dump. So when it comes to like my one-on-one, private consultations, I do go in details of what to do in order for you to identify that this is accumulation and this is distribution, and what strategies you're supposed to be trading in order for you to like short at the maximum area, in order for you to like, benefit from this particular dump. And I also give you specific methodologies in order for you to like get the highest probability, when it comes to buying before the breakout happens during an accumulation phase. So sometimes there is reaccumulation and redistribution. Like for example, this particular area was reaccumulation. This particular area was accumulation, reaccumulation, and then the price continued going up. Again, we had reaccumulation. Then later on, we did have distribution right over here. So if we are in a downtrend, right, the price is going to trend towards the downside, start ranging and then have redistribution, and then the price again goes down. So the most important thing that you need to understand is you have to identify the type of market that you are dealing with. Is it a ranging market? Is it a trending market? If it's a ranging market, right, is it distribution? Is it accumulation? Is it redistribution? Is it reaccumulation? So those are the things that you need to find out, and then you can be able to like come up with the best trading strategy. So what else do we have here? So in a nutshell, this is basically how you get to like get the $1,000 per day. Of course, I'm not going to go into details of how to trade accumulation and distribution at this particular moment, because I just wanted to like keep it short, brief, and precise. And to all the serious people who really found this eye-opening, you can always reach out to me using my email, 2019nextup@gmail. We can get you ready to like start making crazy trades and high probable trades, because trading is not made equal. Trading is all about probabilities. The highest probabilities that you have, the more confidence that you're going to have, and the more money that you're going to be able to make. And when it comes to like trading, right, I do have different trading strategies that I use, because there is spot trading and derivatives trading. Okay, so it just depends on how much money you have, what the market is doing, and then you're going to be able to like use different methods in order for you to like achieve your goals. So basically, my consultations, they're going to give you like the whole fine blueprint, the whole juice, so yeah, that's all I had for you today. I hope you found this exciting and interesting, and I hope you learned something new. Of course, I'm going to be going in details a little bit later, but for now, this is all you get to have. Remember, use my Binance.com link in the description box below in order for you to get the free $50, and you're going to be able to like have one of the best platforms out there in terms of exchanges, because Binance is like an all rounded type of cryptocurrencies where you have everything, every little bit of thing that you need in terms of cryptocurrencies. You're going to find that on Binance, and all the services, all the different things that you can do. The Binance is the OG, it's the all-in-one type of platform that you need. So that's why you need to use my email in the description box below. So that's all I have for you. In case you've got any other specific questions, please let me know in the comment section below, and please let us know your secrets in terms of getting to like make, or rather improve, your cryptocurrency portfolio. How do you find cryptocurrencies to trade? What methods do you use, and have you been successful thus far? So yeah, it's been your boy Muna, aka Beyond 10x. Talk to you a little bit later. Bye.